All right. It's Jared here from Crypto Plan. No music today. I am going to put it out to you all and ask you to comment right now whether you want music in the intros or not. So I'm just going to leave it there. I've had some people say no, some people say yes, and I'm going to leave it up to you. But anyway, we are talking today about are you scared? Now, I have been watching the charts like I always do, and I would have expected Bitcoin to go bearish, to break out in the downside of a triangle, which was forming, and to then kind of bounce off some support. And we'll look at that a little bit later in the video. But what I want to look at today is the long-term picture and why I'm not scared. And hopefully, if you are scared, maybe this will give you another opinion. And if you're not scared, maybe challenge me to why I'm a little bit too bullish on the idea that we've still got a lot of upside to go. But before I get into it, please like the video and please subscribe to the channel if you're new and click the notification bell to get those notifications to tell you when this sort of content comes out. It would really help me out. We are zoomed out. We're on a bit stamp chart, on a weekly chart. We're using our 30-week moving average, and we've got volume, and we've got our distance from the 30 MA indicator down the bottom. And I've also drawn a couple of lines here. The three vertical lines are the halfway points, I guess, in the bear market. So, after all-time highs, it's kind of roughly 2 years from the all-time highs, because you've got to remember that Bitcoin, even though there's not a massive data set, it hasn't been around long enough to kind of say always and never, but the 4-year cycle is quite clear. The halvening is quite clear to have developed a 4-year cycle. So we can only assume, and assumptions can lead us to have egg on our face, but the assumption so far is that this cycle will end in 4 years. Now, 4 years from the last cycle top. So that is bringing us to around December, maybe January, maybe the start of January, December 21, January 22 kind of thing. So roughly thereabouts. Now, one thing I kind of want to draw your attention to, and I've been spending actually more amount of time on this chart than I ever have really for these videos, because I wanted to kind of get it right and as accurate as possible. I like maths. I don't like really complicated maths. I like basic maths. I like trend mathematics, where I'm trying to pick up a trend. And I guess if this trend I'm noticing plays out to be true, then it could possibly be a way to kind of predict, Bitcoin's price action in the next market. But we'll judge that at the end of the bull market, because I cannot say with my hand on my heart that this is 100% accurate, because it is merely a prediction. So please do not base any of your trades on what I'm saying today. It is more about trying to separate the narratives from the reality of the technicals, and to say that, are we done or are we not done? And I don't believe we're done. And I'm going to lay out my reasons for why we're not done. So first reason, I've been saying that a long time, is that we are not 4 years from the last peak. So I think there's still things that have to happen in 6 months. But if we just kind of come over here and we look at, I guess, the 2013 peak, and the yellow lines I've done are basically, I started at this wick over here. So I started this wick where, I guess where Bitcoin got super bullish on this chart. So I was like, that's a good starting point. And then I kind of connected it up with some of the floors, So that was resistance, support, all through that bear market, right? And it was even support, coming out of this bull market into the next bear market. So it was support for a while, and then it broke down. It broke down in our COVID event, right? Then it created a resistance ceiling and broke out. So just kind of bear with this idea that this line here has been a long-term, I guess, resistance, come support, come resistance line. And the top line is merely the two all-time highs that I've got in this chart. So, we can call this a channel. Price action has been inside this channel for a long time. For at least six coming, 6 to 8 years, up to 10 years. Once we kind of get through this bull market and into the next bear market. So I believe that we're safe inside this channel, right? So there's a lot of people out there saying that if it breaks below the 30 mark again or below 27, it's just going to fall, and it may. And if it does break below, but just be aware that it has support in this channel, because it flipped that line as resistance, it can become support. So even though it doesn't look like there's any clear support levels on the chart, there is this kind of channel, and channels do provide support, because you can see that back here, it did, and it spent a lot of time along there. So that kind of leads me to my next observation, that in this 2013 through to 2017 market cycle, we spent, from the 31st of August 2015 all the way to kind of March 20th, very close to this particular trend line. And you can see it there, that price action kind of bobbled its way along and kept pretty close to the trend line. Then it separated. So from March 17, it had a dip towards the trend line, towards the 30-day moving average. That's, it's kind of clear there in the red. And then things kind of got uber bullish, right? But if we look over at the next cycle, things are a little bit choppier, right? And you'd probably expect to be a bit choppier, because there's a lot more hype, and there's a lot more kind of talk of institutional. It's a little bit more bullish, so it could potentially a bit more volatile. But you can see here, from our halfway point through to that marker in March 2017. So from December 15 through to March 17, it was a pretty kind of solid uptrend. Whereas from that point, the same point here, the mid-cycle point, December 19, and we've got a counter in the black swan event, and black swan events are unpredictable. So there is a big dip, but there was a recovery. The price action wasn't following that nicely. So what does that do? What does that do to a chart? Well, I guess when it gets sucked below a support level, like maybe Bitcoin was meant to just kind of follow this line generally and kind of then bump it, kind of bump its way up and then go parabolic. But it didn't. It went super bearish because of COVID. And then it kind of bounced its way back up, but found some support. So let's zoom in on that. Let's zoom in on this idea. So kind of support, dip below it, jump back above it, COVID-19, and then it corrected, fairly, V-shaped bottomy out of there. But this line now becomes resistance, pull back towards the 30 MA. So we're still bullish coming out of COVID because we've broken through our 30 MA, but we're bearish until we break through this line in November 2020. So November 2016, which is the 4 years previous, we were just doing a casual hovering just slightly above the 30 MA, just slightly above our trend line for a long time up until March, right? Coming over here, where were we at in March 21? We were well separated from our trend line. We were well separated from our moving average. So things have happened a lot earlier. So when things get too bullish, when things get too aggressive, the market sorts that out because it's things become unpredictable. The market's like going, well, this isn't the way things were last time, and it's not even just slightly more bullish than last time, it's extremely more bullish, so and we'll kind of just have a look at how much more bullish it was. So if you look here in March, in March 2017 March 2017, we're about 80% away from our trend line there, and we were about 60% from our 30-week moving average. In March this year, so a year from the COVID event or the Black Swan event, we were about 200% from our trend line, and we were, was it 256% from our moving average. And at our peak, even before that, we were 136% from our moving average, and even before that, we were 160% from our 30-week moving average. So that's like a large multiple. When in reality, this asset, Bitcoin, should become tighter or less volatile, So it's actually more volatile in this market cycle than it is in the last market cycle, which is very interesting because, longer term, it should become less volatile. It should become more like a currency where the fluctuations aren't as bad. So there's something there. There's something in that. What I also want to kind of look at, and I'm just going to delete a few things so it's not so. So we just need to be very clear here that we're on a logarithmic scale, and if I go off a log scale, things look very different, right? Things look very different. There's nothing there, a big peak there, kind of a bit of action there, and then kind of this folding around. Now, the structures at the moment aren't looking like a bubble popping. They're looking like an overcorrection, a correction from an over bullish move in the midterm, right? So put ourselves back on the log scale and just have a look again about where we are and what we're looking at. So even on the log scale, we've got these pointy tippy tops, right? So we'll hide everything. We've got these pointy tops, and then this rounded thing, So it's like you played that game as a kid, like one of these things are not like the other, one of these things aren't the same. So we've got 2013, big pointy top, 2017, big pointy top. Is this the end of, the next bull run? Not really. It's a rounded top, So that's the evidence I've been putting out there all the time. So I guess the final piece of the puzzle for me is how do we predict what is going to happen next, right? And we can't, but we can have a good old guess, right? Based on this trend line and based on that trend line, I'm going to make, an assumption or a prediction based on some mathematics. So the distance between that trend line and the top of Bitcoin on this particular date, the start of the end of November was 2,311%. So the next all-time high, which was a little bit later in December, so it's kind of a month, 4 years and a month later, we have a separation from this line and the all-time high, the very tippy top of the all-time high. On this chart anyway, this is very rough, is about 1,329%. Now, the decay in percentage growth from this line is about 54%. So this is about 54% of this percentage, right? So what did I do? I times this by 54%. So it's, if the decay is going to be similar, what is that going to be? And that was 764%. Now I couldn't get that accurately, but look where 767% is. It is pretty close to that line. And as far as price goes and timing goes, we are around our $300,000 mark. Now, I've never been a firm advocate of it hitting 300,000, but I know a lot of people out there are. And this is just another piece of technical analysis that says that that might happen. Now, why might it happen is like so aggressively bearish in COVID, ceiling, aggressively bullish early, big correction back. I think even if it comes and retests this line, and the whole market is freaked out and things go down to 25,000, 27,000, do you know what's going to come in is like every single person, every single institutional investor, every single rich person, every single person that's been sitting on the sidelines going, do you know what? It's cheap now again. And they're going to come in and that price is going to move very quickly. Now, I'm not going to say when and why and how that's going to happen, but if it does happen, this line could provide a very bouncy support. Considering it has played a role over the time. So that's my idea. And, just to kind of cap it off, if you're looking at your assets that aren't Bitcoin, ask yourself this question. Is my asset dropping while Bitcoin's dropping? How leveraged is my drop compared to Bitcoin's drop? And is that normal? Is it normal? Does it usually drop with Bitcoin? Does it pump with Bitcoin? Because you can ask me in the comments, people can ask me, is it okay? Is it okay? But the reality is that like things correct with Bitcoin. So if Bitcoin right now is dropping by 4 or 5%, your asset's dropping by 10%, is that normal? That is completely normal. You know what I'm saying? Like, depending on the market cap of your particular project that you're in, 15% could be normal, 20% could be normal, because the leverage that altcoins give you are inversely and, reverse, like they're inversely proportional. So to the upside, you'll get 10 or 20% above Bitcoin's gain, and to the downside, you'll get 20% below Bitcoin's loss. So just be aware of that, and don't freak out, don't panic, because long term, the charts tell us the true story, which is that we've been going in an uptrend channel, and this logarithmic, most of the time we're in the channel, we have a bit of a scary moment, we break ourselves back up this channel, we could potentially test the channel again, go a little bit sideways with it, and then kind of firing out of there, right? So everything's in play until, I guess, we break this trend line again, for myself anyway. If I did see, and please pull me up and tell me to stop talking when Bitcoin actually does drop below kind of 25,000 at any point overnight, which I hope it doesn't, because this is a weekly chart and there's some solid, there's got to be solid resistance levels here. There's definitely a solid resistance level at 28 there. But, I wouldn't be surprised if it does hover its way along and find some closeness to this trend line again before it breaks out again and goes to the upside. Just one thesis I've been looking on, because the V recovery or the recovery hasn't happened exactly as quickly, it's given me an opportunity to kind of zoom out again and just go, I haven't seen this on the chart in the past, but I have seen this in other currency charts. I have seen this sort of structure and this correction in the DXY, which is the US dollar index, right? So potentially, this similar on a weekly chart, bang, 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 3 kind of over bullish attempts, whilst there was probably some bearish divergence in the distance from moving average in the RSI, things like that. The same with Bitcoin. When the currency becomes too bullish while the technicals aren't supporting it, you get a bit of a crash, right? And then you get a bounce back, and then you get a bit of consolidation, and then you get a bit of moving out of there, right? Now, I'm not going to compare it directly to the US dollar, because the US dollar is being intentionally inflated. Well, it's being intentionally caused to lose value, whereas Bitcoin clearly is the other way. But this particular structure here, the 3 tops, if you go back to the Bitcoin chart and look at the kind of the three tops, 1, 2, 3 there. Probably a little bit clearer on the 3-day chart. 1, 2, 3 tops caused the kind of crash. It was the leading indicator for the crash, and I think the more I look around, the more I see that kind of structure. But we're safe for now, up to down to kind of 20, 24, 25. If it has to do that, I don't think it has to do that. I think actually people are waiting to snap it up again at 30, because they're like, well, it went there once, it went there twice. Will it go there again? Maybe they've got it a bit lower at 28, 27. But there's a lot of buyers hovering around in this zone. So it's okay if things crash further. Once again, the volleyball pulls down, the spring pulls down, the more it fires to the upside, right? So we just got to remember that and keep that in play. I hope you like this one. I hope you like the kind of, the thought I've put into this. It's not, the mathematics is not strong as in, because Bitcoin hasn't been around for 30 or 40 years, you can't kind of do the same analysis you could do on the gold chart or on the silver chart, because it hasn't been around long enough to actually say this will happen. But I think if it does happen, the way this plays out, then there's three sets of cycles and evidence that says that this is kind of playing out. So it is in play, and I guess a trend is a trend, and some maths is some maths, and you can only predict based on the past to what the future will happen. And 300 is in play, that channel is there. But either way, we're in the middle. I don't think we're going to go much further to the downside. As an entry point, we've got a couple of grand to fall, but a lot to gain towards this upper edge of the trend. And we aren't pointy, so we need to get pointy, and we haven't been pointy. So Bitcoin's okay, altcoins are okay, the market's okay. We've got 6 months to go. Bring it on and stay safe. I've been Jared, it's been Crypto Plan. Please like this video if you like these kind of zoomed out analyses, and I'll chat to you on the next one. Bye now.